All right, so this is the January 2023 market report. What we want to do is we want to just go over a few things to give you an idea of where the market's at. So the first one we want to start out with is the available listings. So the available listings has gone down about 23% over the last 4, 5, 6 months. So we're down to about 7,900 available listings, all price ranges, all types of properties as of today, the day I'm doing the video. We used to be about 5 months or so ago, we used to be around 10,700 available properties. So we have had a big decrease in the amount of homes on the market. Now, of course, there's been some buyer demand drop as well. But as we're looking, the overall amount of houses available for sale have gone down quite a bit. The second thing we want to look at is properties that have gone into contract. Well, we've steadily decreased since March of 2022. So each month it seemed to be almost a little bit with the blip here and there, but in general, the amount of properties in contract was going down as well. So in January, it does feel like there is an uptick in properties that are going into contract. Of course, we won't know these stats until February, but it does seem like buyer demand's coming back a little bit, and more listings have been taken off the market. So we'll see if they come back on. We'll talk about it later, but February, March seems to be the amount of time when the time of year when a lot of houses start going back on the market. Okay, so let's talk about the overall average house price. So considering all types of properties, the average home price decreased from January 2022 to December 2022. So in January, the average price was $466,000. And the average at the end of December was $456,000. So in general, the average property decreased about $10,000. Now, if we look at just single-family homes also decreased by about the same amount of numbers. So January, it was about $534,000 was the average single-family house, and at the end of December 2022, the average price was $522,000. So about the same decrease. Now, one thing to mention and to consider is when we're given these average stats and we're saying, hey, look, this is kind of where the market's at, that doesn't necessarily mean that your particular home is affected exactly the same way. So in every market, the Las Vegas market, we have, Henderson, Las Vegas, Summerlin, North Las Vegas, Boulder City, Pahrump. We have a bunch of different areas, different cities, and they don't all appreciate or depreciate together. So as the market moves, some areas do better than others, and some do worse than others. Also, when you're looking at your house, there's going to be a lot of things that go into consideration when seeing if your house is affected the same way in an appreciating market or a hot market. Homes with a lot more newer upgrades, pools, huge yards, maybe guard-gated communities, things like that in master plan communities. Those become very hot properties and typically go for quite a bit more than the properties, say, down the street or across the street. So when we're talking about this stuff, just make sure you realize this is just the general market. If you ever want some specific information about what's going on with your property or your neighborhood, obviously just give us a call, send us a text, check out one of our tools to help you keep track of your home's appreciation. But again, it's very difficult to come up with an accurate number without specifically doing the research on your property.